The Mexican peso is one of the most traded currencies in the world, and is third in the Western Hemisphere, behind only the US dollar and the Canadian dollar. Emerging market economies such as the Mexican tend to attract investment capital during times of economic expansions and global stability. However, during times of instability, currencies like the peso can experience wide fluctuations, which is called volatility. The Mexican peso is a formidable international financial instrument due to three specific factors that have helped drive the currency's liquidity. The first factor is the difference in the interest rates. Typically, Mexico has higher interest rates than the United States. The central bank keeps these higher interest rates. For example, Mexican government bonds were paying about 8% in interest per year in 2019, compared to around 2% for the US dollar. As of February 2022, the key rates in Mexico were about 6%. The purpose of keeping a high interest rate is to slow down inflation and protect the currency, whereas the Fed funds rate is close to 0%, designed to stimulate the US economy during the 2020 recession. Investors have the opportunity to apply a strategy called carry trade. They would borrow money from the US at a very low interest rate and put that money into Mexico where they would get more profit. The trade can work well in times of stability since the US dollar Mexican peso exchange rate will likely be stable. But during the 2020 recession, uncertainty rose due to the pandemic. The dollar tends to appreciate or rise in value versus other currencies during recessions. The second reason the US dollar Mexican peso pair is so attractive for investors is the physical proximity between the two countries. Highly prosperous border regions engaging in commercial interactions significantly increase Mexican peso importance. Regarding trade, the United States exported more than 276 billion in goods to Mexico in 2021, while importing 384 billion worth of goods, adding significant liquidity. However, the trade agreements with Mexico can be revised, which can lead to volatility in the exchange rate and capital flows between the two countries. For example, after the election of Donald Trump, the NAFTA agreement was renegotiated, creating uncertainty which in part led to the peso depreciating by nearly 18% against the dollar from October 2016 to January 2017. Fortunately, a new agreement, called the US-Mexico-Canada Trade Agreement, was eventually reached in early 2020. As for the third factor that affects the volatility of this pair is oil prices, which have consistently been an important causal factor in Mexican peso exchange rate variations. Mexico is one of the largest petroleum producers globally and is the fourth largest oil producer in the Americas after the United States and Canada, and the second largest in Latin America, ranking only behind Brazil. In 2021, Mexico had 5.8 billion barrels of crude oil reserves. Some research has shown that an increase in the prices of oil appreciates the Mexican peso. Therefore, a decrease in the price of oil will depreciate this currency. Nonetheless, evidence indicates that since the early 2000s, the central bank in Mexico has been able to implement a solid and credible monetary policy, which has resulted in maintaining the purchasing power of the Mexican peso. The central bank counters exchange rate pressures by accumulating or reducing foreign exchange reserves. In simple words, the Mexican central bank sells US dollars when the Mexican peso is losing its value.
Created using Powtoon.